Welcome to another CEO Wisdom Pod. We have Jeff Seibert with us today. Jeff is a CEO at Digits, host of Between Two Founders, has 100 plus angel investments. So Jeff has a cool background, and I think you're into wine as well, right, Jeff?
I am big into wine. I run a series of wine tasting events as well. Yes.
Very nice. So tell us a bit more about yourself and your full background.
Well, Charles, it's great to be here. Thanks for having me. As you said, I'm Jeff Seibert. I founded Digits 6 years ago to basically reimagine small business accounting. My background is entirely software. I taught myself C when I was 12, fell in love with coding, came out to Silicon Valley for college and sort of never looked back. And Digits is my third company. So I built and sold a document collaboration startup back in 2008 to Box. We powered document display on Box for the next 5 years. I started Crashlytics in 2011 in the mobile dev tools space, helping app devs figure out what line number of code their app was crashing on. We went from 0 to 300 million devices in 12 months, ended up getting acquired by Twitter. At Twitter, I spent 2 years as head of developer platform. And then in 2015, they named me head of consumer product. So leading the core Twitter mobile and web app development. And then left Twitter in 2017, helped create the Netflix documentary, The Social Dilemma, about the challenges of social media and psychology, and then started Digits in 2018.
And why were you built that way? I mean, most folks do not learn C at 12 or go to build out like multi-million dollar companies. Why are you that way?
Yeah, I was randomly given the book Mac Programming for Dummies by my parents for Christmas that year. I had not been into computers at all, like whatsoever. I was into nature and playing outdoors and everything. And I read this book, and to be honest, I didn't understand it. And I put it down, and 6 months later, that summer, I read it again. And on a whim, I tried the Hello World example. Every learning to code book starts with Hello World. And this was on a Mac in, I think, 1997. And I changed it so it printed Hello World in orange instead of black. And the moment
GG.
that text turned orange, this light bulb went off in my head. And I was like, oh, wow, I could make this computer do anything I ever wanted. And I ran
Man.
outside. My dad was mowing the lawn. I like screamed this to him. I think he had no idea what I was talking about. But from that moment, I literally like didn't want to do anything but code like my whole life.
So sort of nerdy slash obsessive personality.
I guess so. Yeah. I tend to fall down rabbit holes and sort of keep asking why and try to get to the root of the issue. And so that's the story of my three companies. Each one was a problem I had that got super frustrating for me. And I basically was like, if no one's going to solve this, I have to solve it. And so that was the case with Crashlytics. Stuff I was building was crashing. I needed to figure out why. So I then built the thing to tell me why it was crashing. And that turned out to be a way more interesting business. And then same with Digits. Like over the past two companies, I got super frustrated with the accounting and like, why don't I have live insights? Why don't I have graphs that visualize my cash flow and just show me everything I need to know? And so we had to build it.
And did you build to solve problems? Did you build for exits? Why did you build ultimately?
Yeah, only to solve problems. I'd say the thread combining all of them is I love creating software that saves people time. And so collaborating on files, debugging their app, understanding their business finances. And so I don't really focus on an exit or an IPO. Maybe one day that'd be great, but like that's not the goal. The goal is let's save all of these business owners hours per month and allow them to focus on what really matters, which is growing their business.
And how was it to get acquired, I believe, in 2013 by Twitter and work it at the Dorsey Twitter?
Yes, exactly. So they called basically the fall of 2012 and were like, hey, have you ever considered working for Twitter? And I was like, no, like, why would I ever do that? And so after a bunch of conversations, they ended up persuading my co-founder and I that this was a core part of their mobile strategy, that we could come in and take on big roles, that they were willing to basically offer us a deal value that was compelling. And so we never intended to sell Crashlytics. But in retrospect, it was a great outcome for the product. Twitter agreed in the negotiations to make it free. And so today, Crashlytics runs on 6 billion MAU. It's on effectively every phone on Earth, which is just makes me so happy. And so, yeah, it was fascinating being thrown into Twitter. This was sort of towards the end of the Dick Costolo era, right before Jack Dorsey returned, pre-IPO. everyone thought Twitter was the next big thing. Of course, as we all know, the story ended somewhat differently, but it was a really dynamic time at the company.
And yeah, tell us your version of how the story ended differently. Like, I mean, I have my opinion of things. I think Elon just acquired for personal gain. He said to the world that he would do so for democracy, which was complete bullshit because he ended up yeah, having it acquired by X.ai and for
Yep.
data harvesting purposes. So full of
Yep.
shit, Elon, calling you out there. And yeah, what happened in your opinion in 2020?
Yeah, I think the company did fail to achieve its own goals. It turns out growth had slowed considerably after IPO due to a bunch of product issues. And you may have read some of the books about Twitter, lots of internal leadership drama. I think the company lost its way a bit on like what it wanted to be and what mattered in the product. And there were too many teams building too many different things that were sort of tearing the product apart without it having a focus like momentum towards one direction. And so Elon came along, and the fact that he was obviously willing to spend the money, but able to buy it to begin with is sort of an indictment of like it was failing to really achieve the momentum that it should have. And then you're right. I think he completely misrepresented the goal of the purchase and what he's done with it. And it's really sad because the product still obviously exists today, and it'll probably
And the
keep
community is still
existing.
there.
Right? The essence is still there, but it's lost its soul.
Right. And your social dilemma documentary, I watched it in 2018 or 19. I think it was about Facebook, right? If I remember
Yes.
well.
Yes.
Why did you create that one? And what was the thesis behind that one?
Yeah. So, as head of product at Twitter in 2016, I was invited to this dinner put on by Tristan Harris, who's the protagonist in the film, the head of the Center for Humane Technology. And at the time, he was Google's design ethicist. And he had started doing work on social media and the implications of it. And he had sort of built this hypothesis that actually consumer social media was starting to polarize people. And today that seems obvious, right? And it's like wildly accepted as true. In 2016, that was actually very interesting to me. We hadn't really focused on that internally at Twitter. And so he invited me to dinner. He invited the head of the Facebook newsfeed to dinner. And we had this conversation of like, what is actually happening and what could we do about it? And the core reason, for those who haven't watched the documentary, is basically if you combine machine learning, now AI, but then machine learning, with user generated content and the goal of making money from ads, you get really negative consequences because the AI is motivated to keep people in the product, keep them scrolling so they tap on more ads. In order to do that, it needs to show you content that you want to see. So it's content you're directionally aligned with, but you find slightly outrageous. That's what keeps you scrolling for more because you're like, whoa, that's crazy, that's crazy, that's crazy.
Roger
And what,
Fix.
yes, same with Netflix, exactly. What happens is you start getting polarized along whatever dimension you feel. And so that's what started tearing the country apart. That's what Tristan realized in 2016. And so after I resigned from Twitter, we ended up making the documentary and got very fortunate. 100 million families have watched it in the US, which is incredible.
Right. And you said that's what sort of tore America apart more precisely. It's like in what percentage, right? Is that like 25% of the reason why America got torn apart? Because I think the number one reason is Trump himself. And if we dive even deeper in the roots of that, is just capitalism gone too far? I do believe that this is it. And also like media was a version of that, like of social media, always like creating urgency and this dopamine fix and this adrenaline in people. So like what percentage was that part of like the current separation we're getting in America?
Yeah, I don't know precise percentage, but all of those factors loop in. So Trump actually used this to his advantage. He was one of the first to really know how to spread messages on social media and start taking advantage of this polarization. It's also, you're right, it's directly tied to capitalism. And this is why I felt so trapped at Twitter, because even as head of product, you can't fix it if it's an issue with the business model. And when the business model is ads based and you're a public company that has to report quarterly earnings, you can't pull back from that business model or you're toast. And so it's a real trap. I think there's all of these issues.
Shouldn't we just reinvent how the stock market work? I think there's been like Eric Reyes, that the guy, the lean startup way guy,
Mm-hmm.
that is doing the long term stock exchange,
Yes.
which could modify that model. Because, like you said, I'm in full agreement. I think it's just like old men that are investing in stocks just for a return. They don't really care about the impact of these companies, of the sustainability of these companies. So shouldn't we reinvent the stock market itself? Because capitalism is also beautiful, right? Like both you and I are ultra capitalist.
Yep.
We don't want to throw the baby in the bathwater. So what do you think about that idea of long-term stock exchange?
So I love what Eric Ries is doing. I think that's a super interesting direction. I do think it can be solved also with traditional mechanisms. So if you look back to like the cigarette manufacturers in the 90s or oil and gas and so on, any industry with negative externalities ultimately gets regulated. And social media should be regulated. And there should be clear limits on the data you can use, how many ads you can show, how much time you can force someone to stay in the product, et cetera. What's challenging about software technology is it moves so quickly, the regulators can't keep up. And then there's the trap of them actually going overboard and going too far, which is now a lot of the debates around AI are. If they had heavily regulated AI 2 years ago, we would be in a totally different world today, and it actually wouldn't be beneficial. So it's difficult. There aren't sort of easy answers. I do think social media today continues to be very damaging. And there are like single things you could do that would change the story. So, for example, just to propose it, if you regulate it and say, hey, autoplay is illegal, that would be a huge implication, right? Like if you could block YouTube and Netflix and so on from autoplaying the next video, then you're putting the user back in conscious control of the content they're consuming. That single action would dramatically change things.
Wow. But also, it does seem a bit draconian to do that. I think it's cool to give people the option, maybe in their settings, to
Mm-hmm.
have autoplay on or not, and also like disclaimers, right? Like a quick pop up, hey, do you want that? Hey, did you know that people that keep on scrolling and do that, it leads their brain to this way, it creates
Yep.
more cortisol and all of that.
Yep.
Because we're seeing in America right now, like people want change, right? And we've seen the Doge stuff, which I think was a good intention, but it's like the execution super hard when you're
Yep.
actually like in a government. It's incredibly complex to manage populations at governments, right? So people want change. People want fast moving stuff. People don't want that much regulation, right? And they
Yep.
want efficiency. So do you think that these regulations would actually bring progress or bring us to the dark ages?
It's the endless question. I agree. It's super tough. I think you'd want to be very specific with some things. And you're right. Maybe it's required to be a choice. What's interesting is 90 plus percent of users in software never change the default setting. And so you would want the sort of dominant outcome to be the default setting and then allow you to opt in to a different experience. But yeah, this is why it's gone unsolved.
And we have psychophancy in ChatGPT, in which ChatGPT always tells you that you're right. Yeah, that
Yep.
is correct, Charles.
Right.
You can just go out and do whatever you want. You're right. You're cool. You're the man. Have you given that some thought and how that could affect people's brain? Because yeah, most ChatGPT users, I think they're smart. Most of them are business users, so they already have these check-ins. But you can imagine where an AI tool will be accessed by global populations, which have
Yep.
less mental processes and understanding of their own brains. Where do you see AI could sort of manipulate or go in a very wrong way, just like Facebook did starting in 2004?
I think there's very real implications to it and risks because you're right. So as there's a growing trend towards people building relationships with AI or using it for therapy or mentorship or whatever, you do have to realize the motivations of these models and the products people build using these models are just like social networks. They want you to keep using the product. And so if the therapy model tells you you're wrong all the time, you're going to stop using it. And so it won't do that, right? And I think that is a really dangerous trap. because you're ultimately being guided by something that doesn't have any of its own core ethics. It's just trained on the internet. And it's saying sort of what it needs to tell you and sort of what you want to hear. So you keep listening to it.
Yeah, I think if you're in an advanced state of brain, like I don't know, in your 30s, and you had like various challenges in your life, you did a lot of self-development, it can be good because you can question it and reprompt it, and you already like have good assumptions. Although nowadays it's changing pretty quick with AI, you constantly need to adapt. I
Yeah.
think if you're like in very early stages, it can be pretty dangerous, right? Like think of a child, and yes, child, you're right. That's exactly correct. And
Yeah.
I think most people, there's a bunch of studies on the fact that the brain stops developing after 22. Well, that doesn't say much, like my brain at 22 was completely different than how it is right now. I think you stack up like levels of cognitions, of EQ, of IQ
Yeah.
with time. And I think that can bring a lot of these people into wrong directions. Now, what do you think AI will, the effect that it will have on the workspace? Do you feel that AI agents are starting to take over, and we're also seeing that as a pretty catastrophic, cataclysmic event that will occur in the next coming years?
We are. I think we're at one of the most interesting times in human history, at least in the past 100 years, where the pace of AI is actively improving by the week, by the month. And if you had asked me 3 months ago, could AI agents write good code? I would have told you no. In the past week, like they can write some decent code, and it's not perfect. Like there's a lot of issues with it, but it's passable if you imagined it was written by a junior intern. And that's sort of where we are. Imagine where we'll be in another 6 months. We are deep in the accounting profession. And there it's fascinating because now the models are at the capability, and what we offer with Digits is at the capability of a junior bookkeeper. We accurately book about 93% of transactions. And that's on par with what you'd hire in a junior bookkeeper. And
Right.
so what's interesting about this profession is the accountants are welcoming it because they're actually suffering from their own talent crisis. So CPA enrollment's down 33%, 75% of CPAs are nearing retirement age. And so they're staring at this talent cliff. And the only way the professionals survive is if they can start outsourcing the sort of base level tedium work to AI agents. That'll allow them to focus more on the client relationships and the advisory work and sort of higher margin, higher value tasks.
Right. Very cool. And how fast has it grown since you started Digits?
So we started the company in 2018. We spent 5.5 years in pure stealth mode, just heads down building. We
That's a
just
long time.
launched. So we just launched in March. And
Yeah.
the reaction's been incredible. We already have hundreds of small businesses using Digits for their accounting. We have hundreds of accounting firms that we are about to launch to very shortly. We have a huge wait list. And so we've just been overjoyed by the reaction. And the tech, to bring it back to your AI point, is improving literally by the week, by the month. It is just incredible how quickly it advances.
And how does that compare to QuickBooks? Because me, I'm at the stage in which I built my own custom CFO GPT, and it's pretty wonderful. It gives me
Nice.
like everything that I want. Of course, it's very sycophantic, but it does give me like a clear KPIs, OKRs, predictions,
Yep.
graphs. What kind of feature do you have right now that is pretty game changing compared to QuickBooks, for example?
Yeah. So we designed Digits to be ML native back in 2018, 2019. Obviously, today we can call that AI native. That's lovely. And so what I mean by that is there's nothing bolted on. There's no chat bot you have to like talk to and ask it to do things. We have worked to automate the core accounting workflows. So you plug in your banks, cards, payroll, Stripe, whatever you might have in your business, and Digits auto books 90+% of your transactions. Anything that AI can't do, it surfaces for you in an inbox, so it gets your help. And then once you categorize it, it learns instantly. So we've already had a bunch of circumstances where a company got on Digits. The first month they had to fix a few things, and then the next month it was 100% perfect at doing their books, which is crazy. And so once you have that, then it does a whole bunch of the analysis, reporting, visualizations for you. So it basically gives you a finance dashboard that you can customize. And so it may be similar to the value you've set up for yourself, but we've made it so anyone can benefit from this.
Very interesting. How did you get that digits.com domain? What was the
This is
cost
a
of
great
that?
story. So
It
at
always
Twitter,
is.
at Twitter back in 2014, we launched Digits. It was a totally different product. It was an SMS two-factor mobile app, mobile developer tool. And we called it Digits. The product did super well. We actually got 100 million users. And we bought the digits.com domain. This is actually a funny finance story. So I went out, we got the bids. We were like, okay, we need to spend 50K to get this domain. And I went to Twitter Corporate Finance and told them this. And they flipped out. And they were like, what? We're not buying a domain name. That's ridiculous. Blah, 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 blah. And I went back and thought about it. And I was like, wait a second. Like when you buy a domain name, you don't lose the money. Yes, you pay the money, but then you get an asset. And in theory, the domain is worth that much. And so we could just have it as an asset for Twitter. And I went back to corporate finance and told them this. And they were like, oh, yeah, that's correct. Okay, your budget's unlimited. Get whatever you want.
From night to day.
Yep.
Yeah, these are the same people that spend 50K per employees to ship them to random conferences for free booze and hotels and all that. But no, that's great. I had the guy that sold AI.com on the pod, which is now worth 100 million.
Wow.
He also sold sex.com, which is very expensive as well because of human nature, right?
Yep.
No, very, very interesting. Last but not least, I want to talk about your investments, right? Like you did 100 of them. Are these in like rolling funds that you're part of on Angel List? Like, tell me a bit more about that.
So this is just straight personal funds. After I sold Crashlytics, I started angel investing in 2014 alongside my co-founder. And over the past 10, 11 years, we've done over 100 deals. We're in the first round at Gusto, at Notarize, at Open Door, a whole bunch of unicorns now. And I love mentoring early stage founders and being sort of involved in the journey because I've seen it now a few times. But even as a serial entrepreneur, you only see it your number of times. Through angel investing, I can sort of indirectly see it 100 times over. And there's so many lessons you learn and sort of best practices you gain with that perspective. So, yep, actively angel investing, really enjoy it. It's been great.
And good track record. Like, have you got any exits so far? Has it been profitable?
A bunch of exits, not profitable, which is really interesting. Because these deals take so long to mature, on paper, we're up like 4 or 5x. In real world returns, very little yet. But there's a bunch of hopefully IPOs coming that will turn that around. So yeah, I would say for anyone looking to angel invest in startups, you have to be prepared for a very long journey, like 10+ year journey.
Right. And preferably be a founder first, have a couple of exits yourself first. I guess, because the alternative is investing in stock market and real estate. And you've probably done way better doing that because you know your stuff. But also the connections it created for you, it probably generated other deals left and right, correct?
That's exactly right. So everything I've done has just been inbound to me, opportunistic through my network, through other seed funds or VC funds that want to get angels on board. And so I focus all my time on Digits. I don't spend much time angel investing, but I get to meet a bunch of interesting founders and get these opportunities.
Right. And what else do you do in a day? Do you try new wine on a daily basis? What does a day in your life look like?
A bunch of wine, probably not a daily basis, but definitely a bunch of wine. I fell in love with wine sort of right after college and ended up spending 10 years running wine tasting events for Silicon Valley Bank. Obviously, that turned out not to continue. But after a couple-year hiatus, we're now running them sponsored by JP Morgan, which is fantastic. So if you're in the Bay Area in San Francisco, I do a wine tech event series a couple times a year. So stay tuned for that. But yeah, I love introducing people to great wine and then helping them understand all the different regions, varietals, vintages, like all the details. It's again, yet another rabbit hole to fall down.
And acquiring a vineyard in a couple of years from now, is that on your bucket? Is that a good investment?
It's the best way to have $1 million is start with 10 million and buy a winery. So yeah, I don't know yet. We'll see. We'll need Digits to exit first.
Right. I think I was about to have a guy that does like fractional ownerships of vineyards. Yeah, not sure if it can be a good ROI, but yeah, I guess like VC investing is like the connections it creates, people you can house, and yeah, what better than to wake up in your in-ground swimming pool with a vineyard view, right? And yeah, have
100%.
see your people work and all of that. But yeah, it's a different type of life. So very cool. Jeff, thanks for coming on. Where can people find out more about you?
Charles, thanks so much for having me. Yeah, check out digits.com. You can sign up free if you run a business, would love to automate your accounting for you. And that's the story. Send me feedback, jeff at digits.com.
With Jeff and Charles for